y'all. Welcome back to Random Gleanings. He is Jesse. I'm Chris. Jesse, hate to see that former President Trump got shot at this weekend. Obviously, lots of questions there. One of the ones I've been getting this morning, today is Monday the 15th, is why aren't markets going down if a presidential candidate got shot at? And obviously, terrible.
Yeah.
But
I mean, he got up right there on the scene. Obviously, showed some defiance in that situation, which obviously got some people rallied up. So maybe different than some of the past assassination attempts, or obviously the assassination of President Kennedy.
Yeah.
But in fact, we'll talk a little bit about maybe
how it affects the election.
How there's some things that could affect the election, or more specific to our area of expertise, how there might be some market-related stuff. Yeah,
let's talk about inflation first. So this chart is getting under 3. We've got one of the inflation readings, consumer price index readings, under 3 now, which is good. Mm-hmm. You're starting to get some signals that, we're going to more than likely get a rate cut in September. Mm-hmm. They meet in July, whether we
last
get one or not.
Last day of July, yeah. So, for all intents and purposes, it's almost August at that point. But either way, I think that the odds are saying, and maybe it's our next chart here. Next chart shows where the probabilities land on what the options markets are suggesting that the Fed will do and the time in which they'll do it. So still looks like by these options markets that there's still a probability for
one now.
Not expecting one now, but still expecting maybe 3 by the end of the year.
Yeah, and the one thing I'll say about inflation is that the two biggest things that were holding things up were property and casualty insurance, and then owner equivalent rents. Owner equivalent rents finally slowed enough to kind of bring those numbers down. But also, like property and casualty insurance, it's been 20+% up in South Carolina. I saw in Texas it's up like 55%. Those numbers aren't just going to continue.
Not at that pace. So, that's right. If they go up 3% next year, it still stinks to be the person paying that.
They are higher,
right?
But lower inflation is lower inflation.
That's right.
Which is good. Yeah. All right, and to that end, the other big question is how are markets holding up through all this? Our friend Willie Dilwich posted this on Twitter on the 12th. After yesterday, more than 80% of global markets above their 50-day moving average. It's pretty good. And so ultimately, it's consistent with bull market behavior, right?
Yeah. Moving to this next topic, we've talked a lot about diversification over the last period of weeks. But just wanted to point out again that, after such an enormous move, an outsized move, even, historic move in the large cap index, the S&P 500, specific to the market cap weighted index.
Yes.
We are at a point where small caps, which we've touched on in the past, have hit a mark where they're so far removed from the average performance against the large cap stocks that it's second only in history to a period of time back to October 10th of 2008.
Yeah, so Charlie Bolello talks about last week the performance of small caps versus large caps, and said it was a 6 standard deviation event, which is very rare to be that big.
Very rare, right?
A 3 standard deviation event is 99 out of 100 outcomes. So that's like 1 in 100, 3 standard deviations. So that tells you 6 standard deviations is a lot less than that.
Yep.
So let's look at this. Here's a chart of a 5-year chart for small companies. And by the way, this is the S&P Small Cap 600 Index. There's also a Russell 2000 Index. The difference between the S&P 600 and the Russell 2000, you know the difference?
Profitability.
Profitability, that's correct. The 2000, you've got unprofitable companies. All 600 companies in the S&P 600 are profitable. But as of this morning, we're at the same place we were in March 8th of 2021, and they just haven't gone anywhere.
They've not gone anywhere.
And that's, by the way, that's 3 years and 4 months. So hadn't gone anywhere. Let's look at this next chart, which is that same time period of small companies versus large companies.
Yeah, obviously, the chart backs up what you just said, in that small cap companies over that 3+ year time frame have gone all of 3.5 or 3.3%, whereas the large cap brethren have almost got a 50% gain in that time frame.
Right. So there is reversion potential, obviously. It doesn't have to be, but there is reversion potential. And by the way, mid caps kind of fit in the middle of these two numbers, and we're getting ready to get into mid caps. In full disclosure, we own mid caps in both IRA and non-qualified portfolios. Don't really own as much small cap, but let's take a look at what things happened, or at least at the moment we don't. Let's look in the next chart at what happens during rate cuts. So let's say we do get rate cuts, right? Mm-hmm. Let's go back to April of 2000 and look at rates going from 6.5% on their progressive way down to 1%.
Yeah, pretty stellar outperformance in that regard for the smaller companies. The orange line is small caps, the S&P 600 as you referenced. Green line is mid caps, and the blue line is the large cap folks. And there is a pretty dominant outperformance, even positive outperformance versus a negative outperformance over that time frame for the S&P.
So companies that are growing and companies that need to borrow money, which presumably smaller companies tend to need to borrow a little more money than larger companies may need to borrow. Ultimately, they like rate cuts.
Oh, they benefit tremendously from that. That's exactly right. And going back to that kind of Six Sigma differential between large cap and small cap, this next chart highlights another period. So I guess what we're saying here real quick is maybe there's rate cuts in, kind of in the coming months.
Yep.
We've seen some charts that strengthen that idea. But then also, with as far removed as small caps have been from a performance standpoint to large caps, that October of 2008 timeframe, if we went back and looked at that, well, sure enough, for the next year, small caps.
2 years.
2 years. Small caps outperformed pretty nicely there too, as did mid caps.
Yeah. So actually what's so interesting about this chart is small caps did outperform. They were in purple. Large caps are in orange. What's really interesting to me is that mid caps, they weren't a double, but they were 8 points away from a double of the S&P 500. That's pretty notable.
Yeah.
And those are the companies between small and large. That's where, the next big things come from.
I would say as well, too, lest we forget, that was a pretty tumultuous time there at the beginning of that as well. And so just a reminder that things are volatile, but, in the end, when the setup was as ripe as it was for those smaller companies, they did pretty well.
Yep, indeed. All right, so going back to the election, it would appear that former President Trump appears to be higher than 50%, actually 65% now in the Real Clear Politics betting poll in terms of getting elected. And our friends at Bespoke put out a tweet this morning talking about what happened the last time there was a red wave, or actually the last 3 times that there was a red wave. Stocks were up, but then rates were up as well.
Yeah, and red wave, just not only the presidency, but both houses of Congress is what is currently kind of expected of this election cycle. And so that's what they're referring to, is when both houses of Congress and the Oval Office were filled with Republicans. And to your point, not the worst time to own stocks.
Yeah, right. Now, to be clear, when I said rates were up, I meant that the 10-year yield was up, meaning longer bonds tended to have that end rise versus fall.
Be emblematic of a growing economy.
Yep.
And again, we could look at blue waves and everything else. I bet that the data would probably not be too terribly different from this.
Fair enough. Strategists thus far have made the comment that anything that's a little more isolationist in terms of U.S. policies has the potential to increase inflation again. Obviously, that's not the goal, but it's
the tax law probably being extended. Again, these are all assumptions right now based on what strategists are saying if a Republican Congress and White House is elected into office. But the Tax Cuts and Jobs Act of 2017 that's set to expire at the end of 2025 probably doesn't expire under this scenario. Right. And so it does have market ramifications, as well as obviously tax ramifications.
So back before CPI came out, it looked almost immediately, like right after the debate, like the market was pricing in the potential of more of a Trump-esque presidency. And you saw the longer end of the interest rate curve start to kind of kick out a little bit. But then you also saw that CPI report come through. So you started to see the longer end kind of roll over a little bit as well. So it's going to be interesting to see how this plays out. We're still 100 days out basically from the election. So plenty more could happen.
Absolutely. Anything you're watching?
Back to Suits, trying to finish it off. See if we can get Mike out of jail in Suits. So that's it. Watched a couple things intermittently. So I watched Napoleon on Apple TV. We watched Franklin. Franklin I thought was really good. It was Michael Douglas as Franklin. Over the fourth weekend, we were up in. We went to DC, but then we went to Philadelphia as well. And man, Philly was awesome. The National Constitution Center, so cool. It really covered more from basically the 10th Amendment on, from the Bill of Rights on. It's fantastic. Just so good. So much information. I was glad we went. I was super glad that we spent time doing Republic-like stuff in Philadelphia.
Yeah, very cool.
What have you been watching?
Angie and I watched the season 2 of Tour de France Unchained.
Okay.
Look, it is. I never got into biking. Even when Lance Armstrong was doing his thing before all the controversy there. But these guys are animals, just animals. And then, of course, because they make it, dramatized with this documentary behind the scenes look, it's almost a soap opera on two wheels.
Interesting.
So it is good television, that's for sure. And it makes me interested in what's going on in the Tour de France this year. So it's cool.
We'll check it out.
Cool. Well, friends, thank you so much for watching. Share this with a friend. Subscribe, hit the bell. You'll never miss an episode. And we'll talk to you again soon. Thanks.